Ladies and gentlemen, welcome back to the channel. Today is a bit of a weird day. Gold and silver are collapsing. Literally, that's not an understatement. Oil was down about 1% today, recovered a bit. Stocks were down a lot in the morning and then recovered a little bit. To me, this looks like CPI may have been leaked to big firms. After all, if you are the Trump administration or you are in the Fed or someone that works at the BLS, and then you have firms like BlackRock, Vanguard, Citadel, main, market makers or large firms, they could know people at the BLS or the Fed or in the Trump admin, which it would make sense why some of these firms may have the CPI information early, right? They're market makers. Last thing you want is a market maker to be surprised by a much weaker than expected potential CPI report. That could cause unnecessary volatility and chaos. If you're the Trump admin, the Fed, or really anyone else, you wouldn't want to see that, okay? Now, I'm just reading the tea leaves here, but based on how the markets are reacting, my interpretation is the CPI report was probably leaked today, okay? After all, gold and silver down like 6+% is pretty telling. That's pretty definitive, okay? So we're going to get into that here in this video. Your broader market news, take a look at where markets are generally. Yes, you're still in deep fear territory on all of your market sentiment metrics, which historically you want to be buying when people are fearful. And especially if we get a really good CPI report on Friday, that could set up a very strong end of this week. Now, we also have important earnings coming out over the next 24 to 72 hours, which is also going to create some volatility. It could be upside volatility, in my opinion, versus downside volatility, but volatility nonetheless. So we have a lot to get into in today's episode. Hit the like button as well as subscribe to the channel if you have not done so already. If you guys want to come trade with us, come join the trading community, check that link out down below in the description of this video. We are going out in AI, software, energy, robotics, quantum, biopharmas, gene editing companies. These are core themes of the bull market, I believe, for the next 5 to 10 plus years. And we're looking at the smaller companies that Wall Street largely is ignoring, and we're spotting the opportunities, the information disparities, if you will, the valuation discrepancies, targeting those opportunities and investing in them. That is how we are able to generate such large returns this year, by implementing that strategy. And I think this is a great market for that specific strategy. If you guys would like to come join, that link is down below. But with that said, let's get into today's episode. Now, before we get into like CPI being leaked or what is suggestive of that, let's take a look at some of the biggest headlines moving stocks today from Trump and others in the government. Trump says we're going to have $20 trillion in investments in the U.S. until the year end. Russia reiterated previous terms for Ukraine peace in diplomatic communication to the U.S. over the weekend, according to sources. And there is no Trump-Putin meeting planned anytime soon, says the White House. Donald Trump says that we can start paying down our debt with tariffs. And part of the reason why oil may have recovered from some of the lower points today was this headline that the U.S. is planning to buy 1 million barrels of oil for the Strategic Petroleum Reserve. Trump says that China and Japan used tariffs against the U.S. for many years. Wells Fargo's CEO Charlie Scharf says that strength is seen across nearly all business lines, notes consumer spending is rising in debit and credit, calls current environment, quote, almost perfect for the consumer, and adds that business performance and credit quality remain strong. Donald Trump says that he has put out 8 wars and that the 9th is coming. Trump on China says we're going to do well in that negotiation, that tariffs equal national security. Trump says that he will see the Chinese President Xi in 2 weeks in South Korea, and he says he will discuss a lot of things with China's President Xi in 2 weeks. Now let's take a look briefly at the earnings coming out over the next couple of days before we talk about this potential CPI leak. Now we do have some earnings today in after hours. Now I will mention the earnings this morning, specifically like Coca-Cola. While they did say there is some stress in the consumer, earnings have come in great so far. And that's my expectation broadly for Q3. There is zero signs that we should be concerned of earnings coming in bad or a disappointment or anything like that, right? There's just no reason to think that at this point. Now, we do have some earnings today and after hours as well with Netflix, Intuitive Surgical, Texas Instruments, Capital One, Mattel, and some other banks. Tomorrow, pre-market, Amphenol, GE Vernova, Vertiv, Boston Scientific, Hilton, AT&T, and Thermo Fisher Scientific. You do have some more energy data center names like GE Vernova. They make, like batteries, stationary batteries. Vertiv, like cooling elements in data centers, right? And then you have Hilton. Hilton is one of those companies, or even, Capital One, for an example. It's going to tell you a little bit more about consumers and how they're doing and spending patterns, right? We did hear from American Express, which had good things to say about the consumer. So as long as Capital One reiterates that, Hilton says things are going okay, that's a good sign. Because we're not getting economic data, the best thing that we really have right now is what are companies saying about the consumer? That's all we really have. Now, again, Wednesday and after hours, Tesla, IBM, Kinder Morgan, QuantumScape, SAP, Alcoa, and Lam Research. Again, more of kind of that AI trade Wednesday and after hours. Thursday, pre-market, American Airlines, Honeywell, Dow, Hasbro, Nokia, Southwest, AutoNation, and T-Mobile. And then Thursday and after hours, Intel, Newmont, Alaska Airlines, Deckers Brands, Boyd, and Ford. And then Friday, pre-market, P&G, Booz Allen, Hamilton, and some others. So big week of earnings, but really next week is the pinnacle of Q3 earnings when you're going to get your big tech names. And then after that, you start to get some smaller cap companies in the following weeks, and then you really conclude earnings with NVIDIA. But I have no reason to think earnings are going to come in bad. Now, here's the kicker. This earnings season for Q3, you have the highest expectations that we've seen since 2021. So basically, everyone's pretty bullish on this quarter's earnings. So it's going to be a little bit harder than in other quarters to impress. For an example, last quarter, the year-over-year EPS estimates were up 4%. So people were expecting 4% year-over-year earnings growth. We came in at over 11% year-over-year earnings growth. That is partially why stocks have continued to do well. Well, now this year, you're expecting like 6% year-over-year earnings growth. That's the highest expectation. Now, if you come in at 8% year-over-year earnings growth, that doesn't look as good, right? You need to really, continue to impress on earnings from that perspective. Now, again, in the broader markets today, we had some weird shit happen, okay? Today was a very strange day. Gold down 4.66%. Silver down 6.5%. Platinum, palladium, down well over 6% each. Oil is now up 0.33%. Earlier today, it was down about 1%. 10-year Treasury yields are down about 3 basis points to 3.961%. Okay. Stocks were generally trading lower. Seems like they are now starting to recover. So in the morning today, it was really weird, okay? Because silver and gold, what are they? Why have they been doing well? Well, there's the crowd that wants to get away from the US dollar, okay? So that's part of it, and that complicates things a little bit. But generally speaking, silver and gold are seen as inflation hedges. So the higher gold was going, the more concerned you would say the markets are about inflation. Now, oil was down about 1%. So at that point, it's like, okay, that makes sense. People were maybe expecting a good CPI report this Friday. Gold, silver selling off, oil falling, right? Even now it's up 0.33%. That's not like a surge in oil, right? So lower oil prices are basically a sign of weaker demand, right? Because oil is a function of really supply and demand on a global level. If oil is high, that means that the economies are doing well. Okay, if oil is falling, that means economies are not doing as well. Well, if economies are not doing as well, inflation cannot thrive in that environment. Inflation cannot thrive if consumers and the economy are doing poorly. So both of these things kind of suggested that, maybe we're going to get a really low CPI report on Friday. Well, stocks had been, selling off. The Russell was down over 1% about an hour ago. Now it's only down 0.06%. That was a little strange because if we're expecting a good CPI report on Friday and markets were pricing that in, wouldn't stocks be trading higher on that? Wouldn't the Russell be trading higher on that? You would think, but that's not what was happening. Okay, now something I've talked about on this channel for a while now, ever since the government confirmed that they're going to be putting out the CPI report on Friday because of quote unquote a social security adjustment. Okay, that's BS. I think the administration is putting out this CPI report on Friday because the numbers are going to be good, right? That's it. That's why. The government, Trump is not incentivized to put out a bad CPI report as the first set of BLS data coming out since the government shutdown if it's going to be a bad report, right? They're not incentivized to do that. They don't have to do that. They could just not put out the CPI report and blame it on the government shutdown. But the fact that they are putting out the CPI report, Trump is like, okay, put out the CPI report. To me, it suggests that inflation is probably going to come in lower than expected. Here's the good news if you are an equity investor. Core CPI month over month is expected at 0.3%. That's pretty high because, again, last month was 0.3%, so that's not expecting an improvement. Same for core year over year, expected at 3.1%, unchanged from last year at 3.1%. Headline inflation is expected at 0.4%, unchanged from last month. And headline year over year inflation expected at 3.1%. That's actually higher than last month's 2.9%. So again, judging off of the silver and gold collapse today, you could either throw it in two buckets, in my personal opinion. You could say that it's just a liquidation. And at one point in the morning with the Russell that was down so much, with a lot of areas of this market that were selling off, it did kind of look like just a liquidation, okay? More likely than not at this point, with the recovery in stocks, it's starting to look like maybe the first pricing in of what could be a good CPI report on Friday. Now, there's still a couple of days before Friday, so we will see how stocks react. But if you've been in the markets for a long time, you know that big money tends to get the CPI reports early, right? For an example, the Fed knows what the CPI report's going to look like. Trump knows what the CPI report is already going to look like. Staff members at the BLS already know what the CPI report is going to look like. Well, take a Citadel or a BlackRock or a Vanguard or someone like that. They know people in the Trump administration. They know the people at the BLS. They know the people at the Fed that know the CPI report. So the odds are probably good that the market makers, the people that literally help the market stay liquid, have a pretty good idea of the CPI report. So if they have a pretty good idea of the CPI report, wouldn't that make sense? If Treasury yields are down 3 basis points today, if gold is down 5% today and silver's down 6.5% and these other precious metals are down a similar amount, wouldn't that make sense that they are front running a good CPI report and selling gold and silver, buying bonds because if yields are falling, that means investors are buying bonds. Bonds work like a dividend stock, right? If you have a $100 bond and that pays you, let's say, $5 a year, that would be a 5% yielding coupon, stock, bond, whatever it is, right? If people go out and start buying that stock and now the stock is $200, that yield is now 2.5%. Okay, same is true for bonds, right? As bond prices go up, the yields come down. Okay, if people start to sell the bonds and drive the price lower, then the yield goes up, right? It works just like a fixed dividend stock. Okay, this to me looks like a little bit of front running for the CPI report. Now, we'll see in the coming days what happens to gold and silver. Gold and silver has been on a bit of just a face ripper rally recently. So is it theoretically possible that this is just kind of a liquidation because we've seen such a strong rally over the past year? That's possible, right? I mean, gold is up almost $1,000 per ounce since August of 2025, like 2 months ago. Okay, gold and silver have both been on a face ripper rally. I've literally had people come up to me because they know I'm invested in stocks and markets and all this, and say, "Hey, is it a good time to buy silver?" For whatever reason, people like silver more than gold. And I'm like, I would probably wait until it comes down a little bit, right? That's what I've told people. So yeah, there was definitely a little bit of craziness in silver and gold, but with the CPI report coming out on Friday, you could perhaps make the argument that the CPI report was leaked to, again, not retail investors, like big money, right? Because you can also make an argument that you would want the market makers to have an idea of a volatile data set like CPI. What if the CPI report came in negative on Friday? What if the CPI report showed inflation is collapsing? Well, that obviously has implications for the economy, because if inflation is collapsing, then maybe the economy is collapsing. That's not necessarily great for stocks, and I don't know how positive of a reaction you'd see in the markets. But wouldn't you want the market makers, if you're Trump or J. Powell or anyone like that, to have an idea of what the CPI report was going to come in as, so they're not caught offside, so there's not extra selling or volatility when you maybe could prevent that? That would make sense, right? So while I can't prove that the CPI report was leaked, if you think about these things logically, sell off in gold and silver, sell down in bonds, slight bid in stocks as of now. Again, there's a couple days before now and Friday. You can make an argument that maybe the CPI report was leaked to the big guys. Let me know your thoughts on that down below in the comment section, because that's the only thing that makes even remote sense to why gold is down 5% in a day. Silver is down 6.5%. Now, the CNN Fear and Greed Index today is sitting at 30. That is unchanged from yesterday's close. Market momentum is neutral. Stock price strength is fear. Stock price breadth, extreme fear. Put and call options, extreme fear. Market volatility is neutral. Safe haven demand is extreme fear. Junk bond demand currently in extreme fear. Again, just like the AI Investor Sentiment Survey, we will get a new one this Thursday. But the last one we had on last Thursday, on October 15th, showed 33.7% bullish investors, neutral investors at 20.3%, and bearish investors at 46.1%. I show you guys the CNN Fear and Greed Index. I show you the AI Investor Sentiment Survey. Again, not because there's a lot of bears and that means the bears are right and stocks are going to fall. It's the opposite. When the CNN Fear and Greed Index is bearish, when AI Investor Sentiment Survey, the AI Investor Sentiment Survey, is this bearish, it is a green light to be buying stocks, essentially. Unless you think some kind of recession is coming or broader problem, you would want to be buying when these things are bearish. Same is true for the percent of stocks trading above their 50-day moving average. It is unchanged from yesterday, sitting at 47.6%. So over 50%, 52.5% of stocks are still in an active decline. And that's not really changing today. So when you have these bearish market metrics to look at, it's typically a good buying opportunity. You can also point towards the S&P and the RSI. Okay, when you look at the S&P's RSI, it recently hit a low of 42. Okay, that is the lowest the RSI had been since you were coming out of the recovery from the April crash. So the RSI before, when you got these knee-jerk kind of sell-offs, like right here on August 1st, S&P was down 1.64%. It was a buying opportunity. Stocks recovered. Here, S&P was down 0.74%. RSI sharply, shot lower. These were both buying opportunities. And, that looks to be the same setup that we have right now. So let me know your thoughts on all of this down below in the comment section. If you have not done so already, hit the like button and subscribe to the channel. It's free 99 to do so, costs you absolutely nothing. But also check out that link down below in the description of this video if you want to come find, identify, and execute investing strategies in small cap AI, energy, robotics, biopharmas. You get the idea. These are core themes in the bull market for the next 10 plus years. We are going out, finding, spotting, identifying, and executing on the opportunities that Wall Street is overlooking. They're just overlooking these stocks. And I think as we get rate cuts, as the economy improves, as inflation goes down, as pro-business policies really start kicking in and going into effect next year, this is the area that has the most opportunity, that has the best risk to reward. Sure, is it going to be volatile? Could you lose 20% in a day? Yes. Could you gain 100% in a day? Yes. And I think picking and choosing the good quality names with this strategy is the best, again, risk to reward in markets right now. So again, that link is down below. If you guys want to sign up with Public, deposit $1,000, get $100 in your choice in free stock, and buy a couple shares of your favorite stock on Public's dime. Check that link out down below. That is the brokerage that I personally use the most. My favorite brokerage right now, by far. So yeah, that is it. Have a great rest of your day, and I will see you in the next one.